The dollar bulls maintain momentum as inflation remains sticky in the United States. How high is this dollar going to rally? With big focus this week on the ECB rate decision. That's important because the euro makes up over 50% weighting of the Dixie. Let's break down all of the key macros. Hey, baby, happy Sunday. I hope we are all well and truly lit. Yes, we're back. We're back with another week in these beautiful markets. And guys, we just are just blessed, right? We are blessed with market volatility. We are blessed with economic events. We are blessed with macro themes. Man, so long as we've got continue to have our fingers on the pulse, we can feel that beat. We're in sync with that. You know, we're nimble, we're agile because we have that macro edge. You understand? We have that macro edge. Now, let's let's start off with the dollar, okay? The highlight of the week for me, one of the big, well, there's a number of data points. We're spoiled, okay? We're spoiled with data from US, well, retail sales, which we're going to talk about the dollar first. We're spoiled with the ECB rate decision. We're spoiled with UK data, key inflation data, labor market data, retail sales, which are all very, very important. You see the downside that we've seen with the pound at the moment because of markets pricing, ramping up their rate cut pricing from the Bank of England after we had dovish commentary from the governor just a week or so ago. Okay, we've got data coming from Canada CPI, which is important because the Bank of Canada in a rate cutting cycle. We have data from Australia labor market data. We have data from New Zealand CPI. And later, late in the week, we've got GDP from China. So, man, there's plenty of talking points. Plenty. All right. So, as we always do, let's start with the dollar. Let's talk about all of this, right? Let's talk about all of this. So, 2 consecutive weeks to the upside for the greenback, right? We were ready for this, weren't we? Okay, you guys know why now. You know. But why don't we paint the picture? If you want to be a macro beast, right, and you want to understand, continue to stay in sync, right? It's always important. You see, I'm not going on here. I just want to just reinforce this point. You see how I always paint the picture with everything dollar related, so that you're always ready. You always know you are the markets, right? In terms of the thinking behind the way it moves. And one thing I stressed, I had obviously a number of calls with people, and one thing that I kept stressing was there are 2 reasons before we look at everything sort of technically macroly. I just want on a macro level, give me your attention. There are 2 key reasons as to why the markets move. We even move on the basis of what the markets want. So remember here, guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Markets wanted rate cuts, rate cuts, rate cuts. Even though the fact that the economy wasn't slowing down massively, yes, we're seeing cooling inflation. Data points were slowing down a little bit, but not to warrant 50 basis points. Markets are ramping with their rate cut pricing, which is why dollar selling. Okay, because the markets wanted and they pressed the FOMC into cutting by 50 basis points. Because really, you don't cut by 50 basis points unless there's a massive economic slowdown, okay? Which at the moment, at the surface, there isn't as such, okay? There isn't a massive economic slowdown. Yes, we're getting closer towards that, that bust that I'm talking about, but still not a massive economic slowdown right now to sort of press the panic button and cut by 50 basis points. That was the markets pressing and pressuring the ECB. Remember, the markets are built up by big financial institutions, and financial institutions want more cash in their fucking pockets, right? The big fat bastards on the board want more cash in their fucking pockets. So how do they get more cash in their pockets? They want rate cuts. Because if we cut rates, then they can do all sorts of things with that extra cash, right? While economy's still booming. Look at stocks, while things are still somewhat supposedly booming. Obviously, that's a whole different conversation, which we'll have another time. But anyway, stocks are pumping to the upside. So this is great for the big fat bastards. Sorry, I get carried away. So obviously rate cuts are good for businesses, right? Good for these financial institutions. The boys can get more bonuses and all that crap at the end of the year and each quarter, whatever. So, but then facts smacked the dollar in the face. Remember just a couple of weeks ago, the smacks bitch slapped them, like, calm down. We're not getting 50 basis point cut. Obviously, Jerome Powell told us that. Non-farm payrolls data told us that. Look at that. And then last week, CPI data remains elevated. It's still sticky. It's still sticky. You can't go and cut again by 50 basis points. It's gradual easing. Because if they cut again by 50 basis points, what do you think is going to happen to inflation? Labor market solid as well. What do you think is going to happen to inflation? It's going to be elevated, right? So back to the dollar here, guys. Okay, we saw sticky inflation there. Dollar's on a trend to the upside now. We broke this structure where we're printing lower highs, lower lows. You see how we just very much structured to the downside. Okay, and now that momentum picking up to the north because look, markets have woken up. You remember I told you before about the markets need to wake up. They're awake now because hence we're only pricing in a cut of 25. And there's a chance that they don't even deliver by 25 basis points. Okay, there's a chance that they don't. But markets obviously expecting 90% probability more or less there. 10% that they're going to keep unchanged with no cut. Now, obviously, you can see the dollar's been really, really clean. Two big pushes to the north there. Been really clean to the upside after breaking out of this sort of range here. We cleared 101. Remember, I said we need to clear this zone here. Okay, which we did. We had a nice little clean breakout and retest. And you see, it's been moving really nicely. Flag, pull back and retest that zone, sort of breakout, retest, breakout. Then another flag. Yeah, big breakout. And now we've got some more consolidation going on right now, subject to a potential another breakout to the upside. Now, a lot of this is going to be driven down to euro because we've got the ECB rate decision this week. And remember, the Dixie is heavily weighted towards euro. Euro makes up over 50% weighting for Dixie. So you see when euro moves, obviously this moves on the inverse, right? Or vice versa. If euro's moving up, dollars move down, you get the point. So anyway, this for me still looks set for further upside. Obviously, on just focusing on dollar macros, we've only got this week, we've only got retail sales, which are expected to be generally decent. We had a little spike to the upside there in unemployment claims last week, which didn't help the dollar bulls initially. But anyway, it's just that seems to have been a sort of a one-off scenario. I don't think it's just a trend of unemployment claims to come. So yeah, let's keep an eye on those retail sales. Expected to remain, generally healthy. Let's see. Still expecting growth there for those retailers, especially. Remember, like we've got a decent amount of people in the labor force still. Wages still relatively high. So we should see some decent numbers there. But the focus is on euro. I'll give a brief overview on this, and then obviously we're gonna dive in deeper. But obviously with euro's been largely tilted to the downside. Obviously we capitalized on some nice shorts within recent times. We ran into heavy supply at this 112. Bam, bam. Okay, one peak neckline, second peak neckline's there at 110. Clean breakout of that, and then just if you put this on an hourly, put this on a you can just see how it's just been really clean to trade. Been breaking out of these flags, breakout, flag, breakout, consolidation, breakout, consolidation, breakout. You get the point. And that's obviously been largely trending to the downside. And, when you look here, after that sort of top being taken out to look on a daily, you can see naturally where that next major support is. If we clear this 109, so we're going to see quite a sharp drop down towards sort of 108, sort of 107.90. Okay, sort of that sort of range there. That would be your next target area. Now, keep an eye on the ECB rate decision. Okay, where they are expected to cut by. This is due on Thursday, as always, where they are expected to cut by 25 basis points. There are some dissenters in ECB that are more focused on bringing down inflation a bit more, but there's a clear growth slowdown in the Eurozone right now. We've seen it at very key data points, PMIs, general inflation has been cooling and unemployment rates worsening slightly. For me, things have been blanketed. Remember how I've been drumming on for the past months? I've been talking about the Eurozone slowdown and it's intensifying. So are they going to be more focused on inflation as opposed to growth? If, for example, they didn't deliver a 25 basis point cut, which is fully priced in, yes, obviously Euro would rally, but then maybe markets will wake the fuck up and think, shit, we need that cut. The Eurozone's slowing down. The growth, like they're having a slowdown. The ECB the markets need that cut. So maybe obviously we'd have this pop higher, but then maybe it comes under pressure after. I think the risk is still tilted to the downside for the euro versus the dollar, particularly more so, given this comeback with the dollar. And obviously, let's see what the outlook is for more rate cuts. Really, they should be talking about more rate cuts to come, to be fair. Inflation is heading in the right direction. Yeah, it's not all the way down yet. If we just look at sort of the previous Eurozone CPI numbers. Easy flash estimate. Okay. Look here. Look, it's coming down. You can see that 1.8%. It's coming down. It's heading in the right direction. So yeah, my people. I think risks are still to the downside for euro dollar specifically. Um, so yeah, obviously as a whole, this Dixie situation is obviously very going to much be driven by euro as well. All right. So, in terms of actual trades for the euro this week, guys, as always, this is just a tiny snippet taken from one of our rundowns where on a daily basis, I'm breaking down those key macroeconomic talking points in terms of economic data, the fundamental themes, everything that you need to know that's driving the assets that you are trading, I cover, right? And then we marry that with what's going on in the charts, right? And make the fundamentals go hand in hand with the technicals to provide more edge so that we have more opportunity in these markets. And as I always say, you see this knowledge that I have, I simplify everything. So you can check it out if you want, the fundamental online bootcamp course, which is there as well in the description of this video. But otherwise, keep enjoying these videos. Smash up the subscribe button, smash up the like button, drop a comment below if you're still finding value in these videos, baby. And other than that, stay lit, stay blessed, and let's get it.